One space that's due for a re-rating. Another space that has done exceptionally well and perhaps is getting re-rated as we speak is real estate. So Gurmeet, coming to you in a bit, we have another expert joining us. Real estate stocks have been surging in trade. Several of the companies we spoke to told us about the solid demand they're witnessing and their promising launch pipeline as well. Murtuza Arsiwalla, who's the director at Kotak Institutional Equities, joins us now to discuss the sector. Murtuza, good morning and thanks for joining us on CNBC TV18. Yesterday, we were speaking to the management of DLF and they said that the offtake is getting stronger, the launch pipeline is very strong, and across the board, be it affordable or luxury, demand is picking up in a big way. How are you looking at the stock now?
Absolutely. Good morning, Sonia. We've been constructive on the residential real estate space, DLF being no exception. And, completely echo the thoughts of the management. At the start of the quarter, let's say around April, May, this year, there were concerns on what the rising interest rates, etc., do. But I think, come June, as companies started reporting their operational sort of numbers, it was no exception from the preceding quarters where sales momentum continues to be pretty strong. Across the spectrum, what we've also seen, which we've not seen in a large part of the last decade, is price increases. DLF's also benefited greatly, especially in the Gurgaon market, with sort of price increases almost touching double digits. So it's been a solid, consistent performance, over the last, I would say, almost 8 to 10 quarters, where we are seeing consistently better, stronger sort of sales numbers, and that doesn't seem to be sort of losing momentum just yet.
Murtuza, when we look at, it's a larger question, when you look at real estate and where stocks are headed and can you stay invested for a while, does one have to necessarily make a call that this is a cycle which will last for many years to come? Or can one kind of, because this is also a cyclical sector, although the cyclicality starts to play in after many years, right? So it's not short cycle in that sense. How do you think about that?
So there are two parts. When we're looking at the listed space, which is where we are investing, these are mostly the stronger, better, larger, more organized players. One is the cyclicality, which you talked about. The other is the market share gain or the formalization of the sector. Over the last 5-7 years, regulators, government, etc., have all been playing their part in sort of institutionalizing, formalizing the sector a lot more. What is also happening is that the consumer continues to shift, in favor of the stronger, better, more organized developers. So one is, an upcycle that you're playing for. The second is the market share gains that you get with players such as DLF or, amongst the other large sort of listed players. On the cycle specifically, it's hard to call. Having said that, we've seen almost 8 to 10 quarters of consistently improving sales, even at an overall sectoral level. We are back to sort of our previous peaks, which we last saw around 2012, 2013-ish, which essentially tells you, you had a sort of soft real estate cycle almost from 13, 14 all the way into FY 2021, and that's when, ironically, it sort of coincided with the pandemic. But that's when you started seeing some green shoots. And, our initial observation was, is it just a quarter of pent-up demand because you've had a near shutdown of the economy? But it seems to be continuing. The demand seems to be good. Price inflation is there in the system. And in a way, while people talk about interest rates, from the Indian perspective, I think what price increase does is brings back some amount of investor interest, investor demand in the sector. And I don't know how the causality works, whether, it's the price increase which is driving the demand or the demand which is driving the price increase. But whichever way, the party seems to continue as far as residential real estate goes so far.
Good morning. So let's talk about some names. The Mumbai real estate stocks haven't done too well of late. They had a big rally, and of late we've seen a bit of a decline in names like Godrej Properties, for example. Do you cover them, and what's your view here and your top picks?
So we do cover Godrej Properties, and yes, that's the exception that we have, to a more constructive or positive stance on the sector. I think Godrej Properties was sort of, the flagship of the real estate sector, and it did fantastically well in terms of pre-sales. It did trade at a big premium because most investors did want to look at it as the way to play the consolidation theme, right? It has a larger brand beyond just the real estate business. What has happened over the last 2 or 3 years is that several other players have played catch up on that, sales numbers. So, while Godrej Properties continues to clock consistent sales numbers, there have been several other players in DLF, in Lodha, in Prestige who sort of played catch up. And really, to my mind, the underperformance is really, readjusting the premium that Godrej Properties enjoyed because you've got other alternatives which do an equal amount of sales. So I think it's more relative rather than absolute.
Okay, it's more relative rather than absolute. What about some of these, South-based players? They've been doing exceptionally well, Prestige, Soba, etc. You think there is more scope there?
So there is, if you look at their valuations, they're not that demanding per se. And again, when I talk valuations in real estate, it's a bit of a tricky affair because the P&L really reflects the work that was done about 3, 4, 5 years ago. Having said that, they continue to benefit from strong demand in Bangalore, as do other cities in the country. Bangalore is relatively, I would say, a more consolidated market per se, because the formalization probably started a bit earlier in Bangalore. Having said that, I think there is still scope for more. Peak sales in Bangalore were almost 1.5x of where we are today. So there is definitely headroom per se. Each of these players, if I were to pick Prestige in particular, very, very commendable performance, in its debut quarter in Mumbai. One of these smaller projects had sort of launched previously. Project in Mulund got launched in the quarter that went by. At almost about 750 crores of sales. That's a very strong debut performance for Prestige in Mumbai. So, Prestige is the leader in the Bangalore market and is making a big splash in the Mumbai market. So, there are definitely players to look out for. Prestige definitely stacks up high in that pecking order.
Yeah, your price target of fair value is about 19% higher than where Prestige CMP is. Soba, 22% upside according to your where you think prices should be. In Brigade, some 13%. Murtuza, you also track, I think, hotels, right? Lemon Tree, you have coverage. Very briefly, is there... That's another space which people are getting very excited about. But you got a fair value of 74, just implies a 7% upside. Your thinking? Yeah.
So let me put it, in perspective in that sense. The last 2 quarters, I've seen continuous earnings upgrades. Business continues to be showing strong momentum. If I were to look at 1Q23 results, both on occupancy, on room rates, you seem to have left the pandemic behind. For a large part of the last 2 years, the hospitality sector was a rebound trade, a bounce back kind of a trade. You saw the worst of business through the pandemic. I think that's behind us. But what seems to be, what these companies are taking back from the experience of the pandemic is a very strong cost control and a momentum which seems to be building up. In my view, international travel, business travel is still not seen its full sort of blast. That could still lead to improving metrics. So while, the absolute upside remains much lower and the stock's done fantastically well in recent times, I would be watchful of how business performance can surprise me still before I sort of re-evaluate my stance on that company.